Can you believe June is over already? I don't know about you, but world events in June 2020 got me feeling a certain kind of way. In this video, I want to go over the dividends that I received, the companies that I bought shares in, and how my balances have changed. My June performance is spread across 3 different platforms: Robinhood, E-Trade, and Vanguard. First, let's talk about dividends because that's usually the most exciting, and June was a huge dividend paying month for me. My co-host is ready and willing to participate in today's video. This is Tinsley. If you haven't seen her before, she likes to check things out and see what I'm up to. Do you want to talk about dividends? Huh? For all 3 of my portfolios in the month of June, I received $272.82 in the form of dividend payments. Year to date, I am at $518 for dividends received. So as you can see, June really was a large chunk of that. Now let's talk about which companies made this possible. In my Robinhood portfolio, I have 2 companies that I invest in that pay monthly dividends. Main Street Capital is one of these monthly paying dividend companies, and they paid me $1.65. I know, whopping amount, right? But remember, this is monthly and then it compounds. LTC is the next one of these monthly paying dividend companies, and they paid me $1.15. Pepsi, $5.15. Pfizer, $6.46. Johnson & Johnson, $7.11. Bank of America, $3.97. Wells Fargo, $9.18. Chevron coming in hot with a $13 dividend payment for June. International Paper, $5.64. Exxon, $7.83. So those are across my Robinhood and E-Trade portfolios. For my index fund ETF portfolio with Vanguard, they paid me $211.72. And if you want to see which index fund ETFs I invest in specifically that gave me those dividends, take a look at my previous video where I list out all of them. I use dollar cost averaging, and then I invest on a quarterly basis. So what this means is over the course of 3 months, I put money aside from my paychecks and other various income sources, and then I do a bulk of my investing at the end of those 3 months. This means for June, I went shopping, and I love shopping. In June, I bought 8 shares of Coca-Cola, 6 shares with the Bank of Nova Scotia, 15 shares of Wells Fargo, 4 shares of AT&T, 2 shares of Disney, and with Vanguard, I bought 6 shares of VNQI, 1 share of VOO, 5 shares of VWO, 6 shares of VNQ, 1 share of VYM, 1 BND, 6 shares of VXUS, 5 shares of VYMI. It is super easy to share your investment portfolio when you're making money. When everything's in the green, you look like a rock star, and I'm sure it builds a lot of credibility here on YouTube when people know that you're worth listening to because you made money for yourself, so I should do what you're doing, right? Wrong. Always do your own research, always take a look at what you're getting into and consider your specific life situation. That being said, we need to normalize seeing red in your portfolio. Just because you're losing a little bit of money right now doesn't necessarily mean that it's going to tank and you're going to lose everything. You have to get comfortable with seeing dips in the market and riding through them so that it will come back up. A lot of people see the markets falling, see the red in their portfolio, and they panic and they sell everything and they make stupid decisions. Letting your emotions take over and make your decisions is a surefire way to part with your money. Today, I'm gonna be sharing the results of my portfolios for the month of June, and spoiler alert, they're not doing all that incredibly well. Does that mean I'm not gonna make money? No, I made dividends this month. Does that mean that I'm gonna lose all the money that I invested and everything's gonna tank and I'm gonna lose it all? No. I see these short-term dips and I know this is just the opportunity to buy more. So I'm going to share all my results with you so that you get comfortable seeing that just because there's a little bit of red in the numbers doesn't mean you're going to lose it all. As I'm sharing these numbers, remember that I started my Robinhood portfolio in October of 2019, and I started my E-Trade portfolio in the unfortunate time of February 2020. Time in market is one of the most critical things to consider. This is because the markets increase over time and the benefits of compound interest. I did a screen recording of my Robinhood portfolio at the close of market on June 30th, so we could see my results so far. Let's pull them up now, shall we? So we see that over the course of a month, I didn't do too hot. My portfolio overall went down 0.79%. I look at my performance over the course of the month, but I also look at it over the course of the quarter, since that's when I do the bulk of my investing. We can see that I was lucky and it went up 12.44% over the course of the quarter. And I mean, the year to date and overall is a little bit depressing. I don't want to focus on that. It's a sensitive subject. I did a video this month showing what I was investing my money into for E-Trade with my dividend paying stocks. In that video, I opened up my entire portfolio so you could see how much I owned of what and how it has performed since I bought it. I want to pull up a similar view right now so we can talk about the performance that's been updated. It's only been a couple weeks, but we can take another look at it now. How about something dramatic to take us to that screen? Okay, that works. You know I love a little bit of drama. So if we look at this screenshot, which I have sorted based on the highest gains. I've mentioned before that AbbVie and Exxon have the highest total gains. Unfortunately, it doesn't have the highest quantity. This just means that I entered into that position at a really optimal time. We see Wells Fargo, JP Morgan Chase, and International Paper. They're at the bottom. What I want to highlight in this image is that there is a lot of red. And as I mentioned, I want to normalize seeing these dips and temporary losses in your portfolio because it is a normal part of investing. So you need to be okay with it. The only way I could truly lose money is if I were to sell all of this right now because it's down 4.5%. I see all the red and it makes me excited because I want to buy more. I see a sale and you know I love a good sale. As a long-term investor, I focus on quality companies that I believe in. I want to own these companies over the long haul. So if there's temporary dips, that's okay with me. I don't need to sell them right now. If you're familiar with dividend aristocrats and dividend kings, you'll recognize some of these names. So I am very confident that they're gonna continue paying me because they've been paying out their dividends over the past 25 or 50 plus years. If you're new to investing, it might be kind of confusing to see the numbers in the quantity column. You'll see there are some decimals and the numbers are not even numbers. And so you might be wondering how this is possible. If you buy one share of Wells Fargo, that's one share. What is with all the decimal places? You'll see with Wells Fargo, the quantity is 35.337. Well, what that means is that I've gotten dividends. Wells Fargo has paid me money out of their profits. I chose to reinvest that money to buy fractions of more shares, so that 0.33725. So I used the money they gave me to buy more of them. So now the next time they pay dividends, I'm not getting a dollar amount based on 35 shares. I'm getting a dollar amount based on 35.33725. So that's how compound interest works with dividend paying companies. If the moral of the story for my Robinhood portfolio was to highlight the monthly dividend paying companies, and the moral of the story for my E-Trade portfolio was to normalize seeing red in the numbers, then the moral and the theme of my Vanguard portfolio is to talk more about the benefits of compound interest. All right, so in this visual, I want to show the blue is the balance of my account of my index fund ETFs, and the green is the actual money that I have put into this. The big spike in the green is when I really started focusing on investing. This was after I paid off all my debt. I started dollar cost averaging and then investing larger sums of money into this portfolio. You'll see after that spike in the green, the blue didn't automatically take off, but you'll see that it has been increasing at a faster rate, and something at like, what would you call that, November, December 2019, it peaks at a much higher rate than what the green is. So that means that the money that I'm putting in is steadily climbing, but the balance is taking off, and that is due to market gains. So the market and the value of these investments increasing, but also the dividends that I'm getting paid out and that are getting reinvested. Of course, I'm not immune to the market conditions, and you can see that significant Corona dip there. So my balances did dip below the amount of money that I put into it. The important thing that I want to highlight, I did not cash anything out. Like a lot of other people that were panicking and exiting the market, I stayed true to the course. And now you can see that the balances are coming back and they are starting to separate now at a higher rate. So again, that just highlights that these dips in the market are typically temporary. Because index funds mean that I own a portion of the market, this is a great representation. Hopefully that illustrated compound interest for you, because the reason that the balance, or the blue part, is increasing at a faster rate is partially due to those dividends that I'm getting and reinvesting into the funds. Essentially, this is my money making me more money. The one thing I want you to get from this video is that temporary losses are okay for long-term investing. You want to ride the wave. You've done your research, you know the company that you're putting your money with is a good long-term buy, you believe in the company, you're not going to be dissuaded by short-term movements like what we're going through right now. I also think this is important because I personally expect another round of shutdowns because coronavirus is not going away. That's why I have cash set aside, specifically with my E-Trade portfolio, so I can take advantage when this happens again. Even though I'm excited about the possibility of another dip and getting some more great deals, I still am really unhappy and really unsettled with what's going on in the world. So please wear your mask. It can save lives. I hope you all are staying safe and staying sane. I know that focusing on this YouTube channel has given me a creative outlet while I am in quarantine, and so I really appreciate every single one of you that are along for the ride. Every single one of you that are subscribing and commenting really help motivate me, and honestly are helping me through my own quarantine. I'm going a little bit stir crazy. I miss going out, I miss being creative, I miss interacting with people, so thank you for supporting me.